All right, good morning and good afternoon, everyone. Welcome to the CoinDesk webinar. We're going to be talking about crypto IRAs. How do they work? Does it make sense? We have a great panel here ready to go, ready to talk about it. So first, we are going to go to our esteemed panelist, Eric Irvin. Eric, if you could tell us a little about yourself, the founder of OnRamp, the CEO of OnRamp. Tell us a little about yourself and tell us a little bit about OnRamp before we get started in the webinar here.
Yeah, thank you. And as you mentioned, I'm the CEO and founder of OnRamp Invest. OnRamp Invest is a technology platform that was really designed to connect the kind of traditional financial infrastructure, what I view as kind of the old world infrastructure, stocks, bonds, ETFs, and whatnot, with this more modern ecosystem of digital assets and all of that infrastructure that has been built up around that, but more for financial advisors and investors so they could access all investments, regardless of where they trade, all in a single seamless integrated package. And that's what OnRamp Invest does for financial advisors primarily.
All right, thank you so much, Eric. So now we're going to move on to the sponsors of our events, of this event today. Sarah Shih. Sarah is the Chief Product Officer for Prime Trust. So Sarah, welcome and tell us a little about yourself.
Thank you. Like you said, I'm the Chief Product Officer for Prime Trust. I think Eric already did a great intro to what Prime Trust does. We are an infrastructure provider that bridge traditional finance with the digital world. So we provide the building blocks businesses like OnRamp can use to quickly launch securely and compliantly in crypto.
All right, thank you so much, Sarah. So glad you're here to talk about it from the Prime Trust and Custody side. And also from the Prime Trust side, we have Sean Ristow. Sean, if you could tell us a little bit about your role there at Prime Trust and a little bit about your background as well.
Yeah, thanks for having me, Adam, and great to be on the panel with Eric and Sarah. So Sean Ristow, I'm EVP of Strategic Business Development here at Prime Trust. I focus really on new verticals that we're expanding into here at Prime Trust, such as the crypto IRA, which we recently launched. And then, on top of that, I've been in capital markets over 22 years. Started on the floor of the exchange here in Chicago and kind of, built my way up and got into crypto in late 2011, 2012. And so haven't really looked back after getting into it.
All right, well, welcome to you as well. A little bit about me. My name is Adam Blumberg. I'm a certified financial planner. I'm also founder of a company called IRAs, where we teach financial advisors and other financial professionals about crypto and how you can make it part of your practice. We also started a DAO called Planner DAO and a certification or designation called Certified Digital Asset Advisor. So that's where I'm coming from the financial advisor side. Now, as a financial advisor, obviously a huge part of what we do is to talk quite a bit with clients about retirement plans. And the idea of crypto and retirement plans in the past hasn't necessarily gone together. And we're going to talk about why that hasn't happened in the past. And we're going to talk about what folks like Prime Trust and what OnRamp Invest is doing to help that. And we're also going to discuss a little bit of, does it make sense? It's something that gets people really up in arms when you talk about it on Twitter or LinkedIn or any other social media or any place else for that matter. Does crypto belong in retirement accounts? Does it make sense? And that's something that we wanted to discuss here today. And of course, as a financial planner, it's something that's near and dear to my heart, talking about how to help people with retirement plans and then looking at an investment like crypto that has this idea of volatility and has this idea of some asset that a lot of people don't understand and whether or not it fits in retirement plans. So to start us off, I'm going to go to Sarah first because we want to go back a little bit in history. I know you've done some work looking at some of the data, some of the metrics here. So let me ask you, Sarah, why haven't investors been investing in crypto through retirement plans? Is it a technical thing? Is it a regulatory thing? Is it advisory education? Based on what you've looked at for your role at Prime Trust and others, where do you think we've kind of not been steered the direction of crypto in retirement plans?
I think the short answer is it hasn't been available to people, right? Crypto, people have been trading crypto for a while. We've seen traditional retirement plan investors, they don't have that vehicle available to them. They haven't had education on the volatility. Is it something they should consider? We've also seen crypto investors. They may or may not have invested in retirement funds, but if they thought about it, that option hasn't been available until now, because to make that available to consumers like you and me, it really needs to be offered securely, compliantly, with very easy fiat to crypto on-ramp. And ideally for businesses like Eric's, if we can have it all under one roof, right? So Prime Trust is the only one infrastructure provider. We take care of opening new accounts, we take care of fiat to crypto on-ramp, we manage the back office to deal with statements, tax statements. So we have all the components to enable someone to quickly launch a crypto, either in a larger retirement plan or for a crypto business to add retirement funds as a business. So that option hasn't been available, honestly, until now. We look in the marketplace. We're the only API enabled product.
Okay, that's an important note, right? Is it hasn't been available, and it especially hasn't been available in kind of an easy way, right? An easy, almost like an on button, that you hit a button and all of a sudden you have a retirement account that you can utilize, you can put crypto into, right? So Sean, tell me a little bit about the thought behind, obviously the custody is one piece of it, but then the other pieces that have to be layered on top and in the past weren't there.
Yeah, so when we embarked on adding IRAs to our tech stack, it was almost actually like a natural fit for us, being that we are a qualified custodian, and having the compliance pieces, the liquidity, and the statements, tax reporting, all the pieces required, is really something that's already in our wheelhouse. So it required some additional development for a few things, but really when you think of a trust and custody companies such as Prime Trust, an individual retirement plan or account is something that is natural to what we do. So when we rolled this out, it is really focused for B2B, and then our customers offer this as part of their overall solution, and we service institutional customers, we service neobanks. So a whole variety of applications now can embrace in the IRA product, and really expand the reach of what they have to offer their customers in terms of retirement.
All right, thank you so much, Sean. So it seems like we're moving towards having that availability more. That again, that kind of on button. I can set up a retirement account, and we need to delineate too, of course, that we've talked about. There's individual retirement accounts, which is an account that I can hold myself, again, that hence the individual part, versus something like a company plan, like a 401k or 403b. So Sarah and Sean, and I'll get you a moment, Eric, but Sarah and Sean, real quickly, when you talk about what you've launched so far with Prime Trust, and what you've seen in the past, are we looking at the individual retirement account? Or are we looking at the qualified, the 401k, 403b, which is a company sponsored account?
So the product we launch is for individual retirement accounts. However, and I'll get to why. However, under our API suite of products, we also have liquidity API, right? So 401k, it needs employer to sponsor. So we do have the component that plan can easily add crypto into their plan, because we have the fiat to crypto on-ramp. It's a whole different world. Employer plans need to sponsor that. For IRA, the reason why we decided to launch an IRA first is it's kind of organic growth. We've heard a lot from our institutional customers that they want it. They want their consumers to have the ability to add crypto. So to us, it's no brainer. We've heard a lot of demand, even in current economic condition. There is volatility, but people are looking for some sort of return when they invest for longer term. and crypto price is low, it's a good time to get in and invest in the longer term.
Okay,
And
thanks so much. Yes.
I think to add to that, what Sarah's saying, with us offering, individual retirement accounts, I mean, crypto has been viewed as a largely speculatory asset. And I mean, I'm not saying that it is or isn't, but I'll let everybody decide themselves. This allows crypto to actually turn from that into more of a long-term investment product, that individuals can now benefit from, and also get the tax advantages included with these type of accounts.
Right. So, and that's going to go to what we'll probably talk about in a few minutes, which there's a technical aspect of can I, and then there's the kind of advisor aspect of should I. Right. So real quick, sticking with the can I and why have I not been able to, or why have people not wanted to, Eric, because you and I both come from more of a kind of financial planner background. So there's the idea of custody, right? Which you and I both know that most individual investors and even a lot of financial advisors honestly don't fully understand what custody means. But in the traditional world, it's made everything much easier, right? Everything's been packaged up nice and neatly. So, from your perspective, there's the idea of custody. Where what else has kind of been missing in the IRA world, and what is starting to be solved in the IRA world that with again this easy button, because there's more to it obviously than just being able to open an account. There's reporting and billing and all that.
I want to
Sure.
double click on the custody. Oh, sorry.
Go ahead.
Go ahead.
Go ahead. Sure.
Just a quick caveat, custody for crypto is a whole different species, right? Traditionally, you have a lot of custodian to custody securities, but crypto custody requires license and also require the technology. So we have both. We have the crypto custody technology and we have the license. So to put both under one roof, I think that used to be the challenge. Traditional custodians may or may not understand how to keep crypto assets safe, because it takes quite a bit of technology build out. Go ahead, Eric.
Yeah, and I guess just to that end, to expand the idea of traditional assets in a custodian, you can't take them out of the custodian. So if your custodian is failing, you really have very little options. You can't move your money out of that custodian and into another custodian that potentially could be failing. In digital assets, you can move your assets out of the custodian and onto the blockchain and take custody yourself. That presents a problem when it comes to retirement accounts, because you're not supposed to be custodying your retirement assets yourself. And so this was one area where we almost had to kind of reverse some of the technology and lock it down so that the assets are safely custodied by a retirement plan provider or retirement account provider, and that has all of the regulations and all of to keep you safe. And the reason for that is so you don't run afoul of some IRS regulation as an individual investor and do something that the IRS will say, oh, nope, sorry, that $1 million that you've accumulated and you thought was tax-free, it's not. And now all of a sudden you have all these back taxes. So really it's for the safety of the individual investor who is putting those assets in a retirement account. And just on the demand, and I know we're going to get to it, but we serve the financial advisor community. So these are educated advisors that are kind of forward thinking and but also, nervous and conservative. And this has been the #1 requested feature of the OnRamp platform is, when are you going to get retirement accounts? When are you going to get retirement accounts? When are you going to, because when you have a taxable account, every single time you rebalance that client's account in order to take advantage of volatility, which this asset class has plenty of, you create another taxable event for the client. And that's painful in some cases, where the financial advisor, if they were to put that asset into the retirement account, they can now do all of the proper rebalancing and take advantage of that volatility by rebalancing, selling when it's high, buying when it's low, et cetera, without having to worry about the tax consequences that they might be kind of building up for their client.
Yeah, and that's a really good point, Eric, because look, I mean, I'm kind of I really love crypto. I really love the ethos around it, but putting it in a retirement plan a little bit goes against the ethos of crypto, the ethos of I want to completely self-custody something. But then people who invest in it and see it go up or are managing it or trading it go, man, I would really like the tax efficiency that's brought to me by a retirement plan. And in the absence of something like this, in the absence of a on-ramp prime trust partnership here, then you are allowing investors to do something that might negate their tax efficiency, right? Which is completely native to the blockchain, completely native to the ethos that we all love. However, it kind of significantly changes the taxability, which is the rules, the wrappers we have to put around something to call it an individual retirement account, right? And that's, I mean, correct me if I'm wrong, all of you, like that's kind of what you try to put on this is you have to take the compliance and regulation that goes along with something called an individual retirement account and wrap it around an investment that people want called crypto.
Yeah, I think to touch on that. So when it comes to these types of accounts, one of the things, let's just take Bitcoin, trading around 20,000, and if actively trading on that asset, the capital gains in a traditional account on short-term capital gains, it can add up pretty quickly. And so, this is a way, if you want to do that, actively trade on that asset. It's a great way to do it in a very tax-friendly method. Now, obviously, everybody should evaluate it themselves and figure out what they want to do. But really, the main goal, I think, to hit what Eric said, is to help people for long-term investment and allow them, for rebalancing so that their portfolio is balanced 100% on what they decide with themselves and their financial advisor. And in the industry right now, you haven't had the ability to do this as an advisor. This is a first in this space where you can actually have an advisor having crypto inside of your retirement account.
Okay, so quick question that we have about the kind of the structure here. Again, going back to kind of the ethos of crypto and it was built on this idea of self-custody, right? But now we have IRA accounts. So in the solution that we have here, are investors able to actually hold the keys to their own assets, their own IRA accounts assets?
I feel strongly about that question. Let me take a first pass.
Yeah.
I want to double click on whether investors want to self-custody. Do they really want to? Because if you lose your private key, you're done. There's no way to recover it. Many people may feel confident that they won't. We've seen that happening over and over again. And actually, we have institutional customers of ours. They want us to custody it. That means we take care of all the transactions. We take care of the key management. We have insurance options on top of that to ensure that won't happen. So when you have someone taking care of that, you can focus on using crypto as an investment vehicle rather than worrying about holding the key and making sure you don't lose access to it. For us, that's actually an added benefit a lot of our customers appreciate, because we ensure your digital assets are secure, you have easy access to it, right? And we have fiduciary duty for that. So from what we see in our customers, that's actually a preferred feature rather than having individuals self-custody. I can imagine, I'll just give you an example of like my neighbors. They ask me about whether they can invest their own money in retirement funds. The thing they don't want to do is to not have to deal with all the management of keys, wallet, having access to the crypto, how to do it. To them, average investors that aren't really interested in the nitty-gritty detail, which is the mass market we want to have access to. We want to have crypto as if it were any other security, right? You want to diversify into a different investment vehicle, and that's all. Like to them, it feels and looks a bit like other public securities they're used to, and that's the way to get the mass market into investing retirement funds into crypto.
Yeah, Sarah, I think you kind of alluded to something very good there, that it's about ease of use. And if people are not used to something and then they see crypto, all you hear in the news about crypto, right, is how volatile it is. And so, let's just take my mother, for example, asking me, what is this Bitcoin thing? Like, is it real? So if people are still asking that question, you can imagine, now you can do it. Now you can invest in an IRA with crypto. People aren't, I mean, it's going to take more education about this asset class to really start gaining more adoption, because I think we all know from hearing everything in the news can scare you. But the reality is crypto and Bitcoin, there is a great use case. And that is why the demand for this type of account has really grown tremendously in just the past, I would say, 5 years alone.
All right, Sarah,
Definitely. That's,
yeah.
yep, go ahead.
You paint a really good picture, though, of what you're offering here, right? Which is, to me, if I were going to give an analogy, it'd be the equivalent of, if I'm going to self-custody my crypto, I'm going down the highway at 100 miles an hour in a motorcycle. What you all are building is a safe car with seatbelts and airbags and everything else. Say, look, Adam, you can still go down the highway and get home, but likely if something bad happens, you're probably going to be okay. Right. And,
Yep,
and that's kind
absolutely.
of what people want. Like more people, fewer people ride motorcycles than ride in cars. And one of the reasons they do that is the idea of safety, right? I feel more safe and secure. I'm going to get home to my family and everything. So a quick question along those points is, in the past, and I know from kind of being in this world for a while, that we still have had, self-directed IRAs where I can set up a self-directed IRA and have, checkbook control and be able to go invest in crypto. So what has evolved from that point to where we are now, again, with your partnership or even with others that are available, but where have we evolved from the self-directed IRA with a checkbook that I can go do whatever I want with, just about, until where we are now, where either myself with my advisor or myself on my own, I can go invest in an IRA with a custodial service like this?
The flow is still by and large the same, right? You can still transfer in fiat into, we're the backbone to whichever provider you use, right? I don't know who you use for your IRA, but let's say you use company ABC and you can still transfer in your fiat. They will then use us in the back end to handle the fiat transfer into your retirement account, and then use our API to go from fiat to crypto. And then we deal with all the reporting. And we also separately custody the actual digital asset. So basically, the business in between, right? Whoever you're interfacing with, they can really focus on providing you with the same retirement services that you're used to. The only difference is now you have crypto as an additional option. So that has always been the approach that we're focusing on and worked for our customers, because the more we focus on making crypto as just one additional investment vehicle, the more likely people will consider.
Yeah.
Okay, so now I think we need to transition, right? Because we've talked a lot about the can I and how can I put crypto in my individual retirement account. The next question that brings a lot of vitriol, of course, is should I, right? And last year, or I guess earlier this year, when Fidelity said they're going to allow 401k plans that they managed to put up to 20% in Bitcoin, it set off this firestorm from financial advisors that I know about. Should you do this? Is this completely wrong? Is it not part of your fiduciary responsibility? So Eric, I'm going to go to you first. Let's talk about should we or shouldn't we, or why should someone, or not should or shouldn't we, because we're not giving financial advice here. Why would it make sense to have crypto inside of a retirement plan?
Yeah, I'll try to answer this with a couple of like a pro and a con argument, and then I'll try to kind of bounce back and forth. So there's that famous quote from Einstein. It's power of compounding is the eighth wonder of the world. This is Einstein who's talking about laws of the universe, and he's power of compounding. People don't appreciate it fully.
Unfortunately, Eric, Einstein was not available for this particular webinar. So we're going to let you quote him and keep going.
I summoned him. Yeah. So the when you compound your investment and you're like, let's say you earn a 10% return, but you're paying taxes at 25% of that every year, you're really only compounding at 7% versus that 10%. But if you could compound all 10% of that in a retirement account, that extra 3% per year is earning an extra 10% each year, and so on. And that power is meaningful. It's like tenfold, depending on how long you have when you're investing. So if you believe that the digital assets are set to continue to rise, a great place to own them is in a retirement account where you don't have to pay taxes on them on an ongoing basis. The argument against might be, well, what about today? If I would have invested in a retirement account a year ago, and now the market's down 60 or 70%, I could have written off those losses, but now I can't write off those losses. And I wish I would have had them outside of my retirement account. Well, that's the same thing with stocks. That's the same thing with, any like tech stocks are down 60, 70%, some are down 80 or 90%. And so you could make that argument on anything. And I kind of feel like this is an asset class where you want to take advantage of the volatility. You want to be able to rebalance on a regular basis. You want to really harness the power of compounding. And the best place to do that is in a retirement or a tax advantage vehicle. And this is it. Here we are. We're finally getting this opportunity. And that's again why so many people are excited about it from the kind of professional investment advisor community. I think a lot of the vitriol just came from the crypto haters, the people who haven't yet even embraced any kind of investability concept here. But it's a nearly $1 trillion asset class. It's not going away. I think that they need to just kind of wake up and open their eyes to, all right, maybe this is something, and maybe we do want 1 or 2% allocated here. And that's really the exciting part, is you can now do it in a safe tax advantaged vehicle.
Yeah, and I would say that
Eric gave a very compelling mathematical driven answer. And Sean, I'll get to your point real quick. But for me, I flip the question around, right? Why wouldn't you? Especially in today's market, you look around, you look at all the other stocks, other forms of investment. Everyone is looking for some sort of return, and that's really hard to find. So the only game that I think is the right game to play is you diversify a little bit. Here's another vehicle. It's a little bit volatile, but so are everything else. So it's a great time to get in low and diversify into it. Over to you, Sean.
Yeah, no, a couple points. So, I think a lot of people don't realize, the entire market has been down, not just Bitcoin. So, it's across the board. That said, though, most advisors, that we've spoken with to date, they're whoever they're, they have their license with or are working with, they haven't been able to offer it to their customer. Even if the customer wants it, they can't offer it. Now, the independent advisors, they have probably the most flexibility, versus those at wirehouses. And while I don't have the data, specific numbers, I would say, a lot of folks I know with teenager kids, they have crypto, and these kids got in early, didn't invest that much, but they have a quite sizable portfolio now. And so if you're the advisor to that family and managing the money, for them, well, it's probably something that should be taken into the picture of the overall, financial of that family. So, and that's where an IRA would be, a great vehicle. You can take that, roll it into that, we offer the rollover, the transfer functionality. So, all of these things, to Sarah's point, it's just like another asset class now. And that's really our focus, and what we're trying to do is remove the friction and open this new lane, if you will, on the highway.
Okay, great. So with some of the metrics that we've talked about here, and some of just the things that we know, the stories that we see, the idea that more Gen Z people want to be in crypto in their retirement plans, there's obviously offerings like yours that are going to make it more available. There's more notoriety. Of course, there's good and bad notoriety of crypto right now. But again, it's very polarizing. Do we feel like there is going to be more retirement money moving into crypto in the near future?
I mean, I think that depends on who you ask. I mean, if you ask, I mean, if what I've heard recommended right now is anywhere from up to 5%, is what people our advisors have been saying that they've been putting their customer assets in. Is there going to be more? I would say most likely. I think you're going to continue to see this grow. To Eric's point, this is one of the top requested features that we get as a custodian, is to allow people to have their assets in these tax advantage type accounts. And I think, yeah, I do think as the market continues to mature and the volatility will slowly subside, I think you're going to continue to see additional adoption.
Eric, thoughts?
Yeah, even just I wish I had the stats, but there are a couple of financial products that are kind of like quasi substitutes of digital assets that came about because there was no ETF built, and a lot of those are owned in retirement accounts, a lot. And I think people have just been waiting for the real thing. And the beauty of owning direct exposure to Bitcoin or Ethereum or others, if I buy a Bitcoin, I own a Bitcoin 50 years from now, and plus all of the value that it's accrued, but it's a Bitcoin. If I buy a financial product that owns a Bitcoin 50 years from now, I own whatever is left after all of the fees that financial product took, and then whatever I could potentially sell it for, which might be meaningfully less. Right now, a lot of these financial products are trading at huge discounts to what the value of the Bitcoins inside of them are. So this is a way to own the direct exposure to the asset class and not have any of the risk of kind of commingling it with your personal funds, where the IRS would disavow it. And so I think the adoption is going to be massive. There's what 12 trillion in individual retirement accounts right now. The amount of wealth millennial generation is going to inherit over the next just 10 years is like $15 trillion. That's almost a fourfold increase in what they own today. And millennials are not the kind of the young 20-somethings. They are in their prime earning years right now. And they love this asset class. Like 70% of them have asked their financial advisors, do you have digital assets? Do you have crypto assets? And typically the answer is no, sorry, we can't do that for you. So, but now they can. And that's what's so exciting about it is I just think it's going to explode.
Yeah, I think when you go to, if you ask, a younger generation of, let's just say 18 to 24, you start talking about retirement, most of the time people are like, yeah, whatever, I'll start investing at some point. And by the time they do it, it's already too far. It's never too late, but you missed out on quite sizable gains and that you could have had. If you mention, oh, you can put crypto like Bitcoin into a retirement account, you're definitely going to catch their interest, because I mean, I've never heard people talk about mutual funds the way that people talk about crypto. I mean, mutual funds, oh boy, type thing is really, I think, how the younger generation thinks. But when you say crypto, like, oh wait, which token, which one you bought, things like that. Now, I'm not saying that that's a good thing. I'm not saying, but it definitely piques their attention, and I think allows for, much more significant adoption of this asset class.
I think that's what makes our job really rewarding, right? If we can, by offering crypto as an investment vehicle, get younger generation into a habit of investing and saving for retirement because of their interest in crypto, that's a very rewarding aspect of our jobs. What I can tell you just from, we had this IRA product in beta since June, so it's been a quarter, right? We already have over 100 Bitcoin invested in a short amount of time. And we didn't open the product up to everyone, only opened up to a handful of customers to try it out. So just from, anecdotally looking at that data, it's very encouraging. We definitely see more demand on the way.
Right. And we all know, I mean, we're not going to sit here and debate the merits of a potential Bitcoin spot ETF, but we all know the reason why that would be so so monumental is not necessarily the fact that, so many people want to get into a spot ETF. It's that if there were an ETF and it has a QSIP and all that, then through a traditional custodian, all this money that's in retirement plans right now, whether they're in 401k or in IRAs, would have the ability to have a Bitcoin spot ETF in them. And there, as Eric said, $12 trillion or something just in IRAs. That doesn't even account the, I don't know how many trillions in 401ks that would now have access to it. So now, if we go, all right, we are helping those people get into actual crypto, get into actually owning the crypto instead of owning a product that owns it. It seems like there would be quite a bit of interest there. So what that gets me to, Eric, is something that you alluded to. Not enough financial advisors are involved in crypto yet, which you and I are both trying to make that change. Do you feel like is it necessary, or I guess why would a financial advisor want to look at helping clients get crypto into retirement plans specifically? What are all the reasons? I mean, other than it's really cool, because I think all of us in this call are past this is a meme, or this is just a fad, because we wouldn't invest this much money and time and everything else into something that is just a fad, that we feel like this is actually a viable investment. So Eric, why would a financial advisor even want to go down that road? And also importantly, sorry, why wouldn't they?
Yeah, it kind of reminds me back in the 90s. Worked at Morgan Stanley. I was a financial advisor, and everyone wanted tech stocks. Like sell everything in my retirement account, put it all in Qualcomm. I lived in San Diego, and so we had massive, and Qualcomm was doubling every year. And as an advisor, you're like, well, maybe we ought to just be a little bit prudent here, and eventually, if I would have told them no every single time, they would have gone off and done it themselves. And then we had the tech crash of 2000 to 2002, and they would have lost their entire retirement account. If, on the other hand, what I did was I said, okay, maybe we should, but let's just do 5%, or let's just take a dose of that. Let's give you the dessert, but you don't have to have all of the dessert and none of the dinner and your vegetables. And it ended up becoming a much better outcome for me, the advisor, because I kept the client, but also for the client. So when things did correct, it wasn't as painful as it could have been. And at the same time, because we owned it, the client was happy because they continued to see the gains as they continued, before the tech crash. So it was just good all around. Like, the client got a better experience. I had a better experience as an advisor to the client, and it's just a much better outcome. What I think advisors have done over the past decade, as this asset class has grown, is they've really given their clients the Heisman, and just said, sorry, we can't help you, go do it alone. And clients did in droves. Like Coinbase has 67 million accounts. That's an awful lot of clients that have gone out and done it themselves, and they haven't fared very well. They've traded their brains out. I think the average turnover is almost 20x per year. So a client will buy, sell, buy, sell, buy, sell. And usually that's not a good strategy. So I think financial advisors have a huge opportunity to just help and to really serve their clients in this asset class, and give them what they're looking for, but in proper doses with a little bit of guidance. And I think people are craving that right now, especially after the big correction, because this year, all of those people that traded their brains out last year probably have huge gains, and yet on their taxes, but yet their market exposure is down so much. So they're having to pay taxes on something that they no longer have. And I think financial advisors could have helped them quite a bit in that regard.
Okay, yeah, it's really helpful. Like, I know the reasons, right? I know why financial advisors want to help. What also, because Sarah, we talked a little bit about some of the data and some of the metrics you've looked at. There's the practical idea of, as an advisor, I want to help you get it in your plan. I know your goals and your needs and your income and your liquidity and such. Now let's talk about it from the business perspective. Why might an advisor want to do this? And this is, we talked kind of before this webinar of, you have these two groups, right? You have the groups of young investors who want to be in crypto, and you have the groups of, middle-aged, older investors. They're the ones that have a whole lot of money in their retirement accounts, right? So you have these two groups where, as an advisor, you might get a bump up because you have crypto. So if you could talk a little bit about some of the metrics and then some of the thoughts around there, in terms of why a financial advisor might at least want to learn about it and use products like this to help their clients get into crypto a little bit safely.
I think it's competition, right? We see a lot of financial advisors getting into offering crypto, and on the demand side, we see both younger generation and those who are older scared about crypto but wanting to get it through a safer channel, through a financial advisor they're familiar with, both asking for it. So whether you're offering that to your customers or not, it's going to be it's going to be your differentiator, right? When everyone wants it, if you offer it, then great. So that's why we want to make our product very secure and sound for our customers, so that they can safely offer it with ease and launch it very quickly to their customers and just add it. Because I think that trend is inevitable, and very interestingly, in the current market condition, becoming more and more compelling, because people are kind of like unsure about where to find that return. And when you're unsure, the most rational thing to do is to diversify into different investment vehicles, and Bitcoin in particular. So just a little bit about the different kinds of crypto. The most demand we've seen is Bitcoin and Ethereum, because they're very different. Bitcoin has long been considered digital gold, store of value. So that has been really popular. And Ethereum, just because it's the largest smart contract developer network, right? And with Ethereum moving from proof of work to proof of stake, a lot more renewed interest has gone into Ethereum. So those two are the leading ones. But coming back to your question, I think it's just a huge differentiator for financial advisors.
Yeah, I mean, in financial advisors, I mean, their main clientele for many of these financial advisors is they're retiring or about to retire, and the baby boomer generation. And as that happens, these advisors are going to need additional clients to continue to grow that business. And what I've found is advisors have been missing that link to the younger generation, because going back to what we spoke about earlier, a lot of the assets out there right now, they're not really appealing to the younger generation. And this is something that they can relate to, they understand. And I think, that will help with the adoption by the advisors' customers, by being able to relate to, oh yeah, I know what Bitcoin is, or Ethereum. So it's definitely going to open up a lot of doors for the advisor community. And I think not just from being available, but from a product point of view too.
A couple of questions that have come in that I want to make sure I address, because we do have a lot of questions kind of about the products you're offering here, or the offerings here. And we've talked a little bit about how in this situation, specifically in an individual retirement account, because of compliance and regulation and IRS rules and all that, it's not necessarily the best idea to self-custody your own crypto, to have your own keys, right? And so you have a solution that allows me to own crypto without actually having control of the keys. But for those of us that understand Bitcoin and understand crypto, we know that opens up some other kind of security holes there. So what in between OnRamp and Prime Trust, what has been done, in case there is some sort of security breach, in case something happens to the wallets that are actually holding the crypto? What are you all doing in terms of insurance or something else that can make me feel comfortable if I am really into Bitcoin and I would really like to self-custody, but I know that I can't really do that in an IRA, or I can't really do it safely and securely in an IRA?
I'll let Sarah take that one from our side.
Yeah, so we use MPC technology, and we have a very thorough process to ensure its safety. We invest very heavily in engineering and risk teams that are focused on ensuring the digital assets are safe. and also the MPC technology provider we use, we make sure all your assets have insurance on top of it, should such event happen. We think that likelihood is really, really low, given how much we invested in the security and risk review and our operational team, how we handle the MPC technology and ensuring access to your digital assets are very secure and sound. But there are insurance options on top of that too.
Yeah, and as OnRamp, so we're a technology provider that offers access to what are called qualified custodians. Registered investment advisors have to have clients with a qualified custodian, and that qualified custodian can mean different things, but it's a higher level of scrutiny that is required in order to kind of serve their clients, to make sure that there's all the controls are in place, all the policies, procedures, everything is it, and then they're subject to kind of additional state and potentially federal regulations that they have to kind of adhere to. We chose Prime Trust because Prime Trust is one of those few qualified custodians, and Prime Trust is really like kind of one of those best in class qualified custodians that offers this service not only for kind of the digital asset exposure for taxable accounts, but they're kind of thinking forward and they're thinking ahead, and they're really like client centric, thinking about, hey, if our clients want retirement accounts, let's figure out a way, because it wasn't easy. It took them a long time to get this done, and there's not a whole lot of firms that do this, and so that's what we love so much about Prime Trust and their ability to offer this service, as well as to be at that like highest standard of kind of quality and safety.
Yeah, and I know from years as a financial advisor, there's like the excitement of, well, now I can help my clients get into crypto, and then there's the reality of, how am I going to do this safely and securely? How am I going to make it easy for myself? Because I certainly don't want to be devoting 5% of client assets to something that takes 85% of my time to get an account open. And then we have issues like tax reporting. We have RMDs. We have all of those things. Required minimum distributions every year. And then we have billing. Like, how as an advisor am I going to be able to charge to bill my clients for it? So how have you all solved kind of those issues? Because those are advisor kind of workflow issues, in addition to reporting and regulatory issues. But how have you solved kind of the workflow issues that I as an advisor have, so that, again, I'm not spending 85% of my time on something I'm allocating 5% to?
Yeah, really, that's why OnRamp exists. So Prime Trust is kind of the bare bones technology infrastructure that provides kind of the connection between traditional and digital assets. But it's an API. It's not what an advisor is going to log into and see and do financial planning and all of the daily workflow activities that financial advisors need. So OnRamp comes in and provides this nice user interface that the financial advisor can now onboard a brand new client to Prime Trust, set up their account, get all of the reporting, have it all pipe back into their existing technology stack. So their financial planning software, their CRMs, their portfolio management solutions. And then OnRamp is just that connective tissue between those two things, where really, I think Prime Trust does the heaviest of the lifting, and then we make it pretty and easy and simple and elegant, so that the financial advisor can spend 5 minutes of their day touching OnRamp and 95% of their day touching the client and really taking care of that client, which is what they do best.
Yeah, I mean, we really provide the plumbing on the back end. I mean, that's our bread and butter, is providing the custody, providing the compliance, the liquidity, the tax reporting, all the statements, all of the pieces necessary for the advisor to interact with their front end, such as OnRamp, and have that seamless experience, so that the advisor does not have to spend 95% of their time managing all of this stuff. We take that and automate it, with firms like OnRamp, allowing for them to focus on their clients and not have to focus on the technology aspect as much.
Okay, so kind of before we wrap up, I want to go back to the beginning and kind of summarize what we've discussed here, right? You have investors that either have or have invested in crypto and like investing in crypto. you have investors that have individual retirement accounts that have not necessarily gotten into crypto for one of many reasons. Those that have invested in crypto have seen, tax impacts, obviously, that are usually negative to them, especially if they're trading it. Even if they're holding it long term, there could be sizable negative tax impacts if you hold it in a taxable account. And so we're kind of solving both of those with this idea of a custodial solution that can wrap the crypto in an IRA account for compliance reasons, for tax advantage reasons, and then for safety and security reasons, right? And that's kind of what we have here. And then you go forward with the ability of an on-ramp to say, well, now financial advisors can get in on the act too, and make it easy for them to help their clients, because the advisor's job is to help my clients with all of their financial life, not just with their crypto or not just with their investments, but how does this affect your life? And how are we going to take an investment you want and make it tax advantaged? Or how are we going to take a tax advantaged product you have and add something that has the ability to grow like crypto? Is that kind of an accurate summary of where we started versus where we've ended up now?
I think so.
Yeah.
I think you covered it well.
All right. Well, we all covered it well. I'm just here to summarize things. So I know and I want to say for anyone listening on the webinar, we've had a lot of very, very technical questions related to Prime Trust and the offering, and related to on-ramp and the offering. And I would direct many of you to go to Prime Trust and to on-ramp and kind of ask some of those super very technical questions around keys and around MPC and such, because I don't think that's what we're meant to talk about here. I think what we're meant to talk about it here is there's now an opportunity to invest your crypto in an IRA and do so in a compliant manner. There is what we talked about also was, should people be doing this? Does it make sense? And again, should, not giving financial advice, but does the ethos or does the investment thesis of Bitcoin specifically and of other crypto assets fit with an individual retirement account? And I think we've decided it does, right? This long-term approach, the idea, like you said, Eric, that I want to invest in tech stocks in the early 2000s and see them go way up. But if I do that, I have a huge taxable event. In an IRA, I don't necessarily have that. And then we've gotten advisors involved. So I'm pretty happy with where we are. Any other final comments from anyone last couple minutes?
Adam, are you going to put retirement funds in crypto?
Wow, that's a good question. I already have. So yeah, I've been doing that for a few. I did it back when Bitcoin was at about 5,000. I did that to test it out, and it has served me pretty well. So I'm pretty happy with it. I did when I moved companies. I had an old 401k one of those that I had actually forgotten about. So for advisors out there, you got clients who have old 401ks or old IRAs that they probably forgot about. And lo and behold, I had, like $25,000 or something in an old 401k. And yeah, I moved it into an IRA in Bitcoin when Bitcoin was about $5,000. And it has obviously, done pretty well, and I'm not touching it. I like the fact now that I've forgotten that it's there, quite honestly. Like, I want to forget because I want to check it out in, 15 years and see what that $25,000 has turned into.
Sounds like a good plan.
That I'm not advocating that anyone else does that, just something that I did. But it's one of those things when you get financial advisors and Eric, clients walk in and they have 12 different retirement plans because they've had IRA rollovers and Roth IRAs and inherited IRAs and old 401k plans. And you can consolidate all those things. Well, it'd be great maybe if a little bit of that you go, well, as long as we're rolling everything, now may be the time to get into crypto or get into Bitcoin, and we have the ability to do this and keep it in that tax advantage wrapper.
Yeah, exactly.
Right. So something I just thought of. Thanks, Sarah. Thanks for asking me, because now I just remembered about it. I'll go check the balance today, and then hopefully I'll forget about it tomorrow. So any other last thoughts, comments from anybody?
No, it's a pleasure to be here.
I just have one. This is fairly exotic and esoteric for the average person, but there's this this growing need of more and more clients are getting older of the financial advisor community, and a lot of that money is going to be passed on to that next generation, that millennial generation. That's part of that $15 trillion that's going to transfer. And there's this concept of a lot of wealthier clients don't actually end up touching their retirement accounts. They end up passing them on through kind of their estate. And this concept of a stretch out IRA, so where the younger generation can actually keep those in tax deferred for quite a bit of time. So this could be an intelligent kind of diversifier in those types of situations where the grandparents or kids or adults want to pass that money down to the younger generation, and they kind of want something that's going to relate to that younger generation. And this really becomes a neat asset class to plug into there. And it doesn't have to be the whole thing. It's just even just that one line item on the statement is pretty neat, for the average client, I think. So
I think it's great. And it goes along with the value that an advisor can have doing things that are not necessarily, I'm going to make your investment portfolio go up in value, but I'm going to do something that's good for you for tax purposes, for family purposes, for all of those things that an advisor can do. So
Yep.
Again, I want to point out we've had a lot of questions that are very technical. So from the Prime Trust side for Sarah and Sean, where can people go to ask some of those more technical questions and get those answers regarding the offering you have?
Our sales team are very well equipped with all the details. And if they don't know the answer, they know where to find the answer within Prime Trust.
All right. And Eric, from your side, because we've had questions around the billing and such. So where can they go to get more answers about that?
Yeah, so onrampinvest.com and reach out, book a demo if you're an advisor. If you're an individual client, reach out to us, and we have a kind of a referral program where we can refer you to other financial advisors that are already clients and already big adopters of the asset class. And then if you want to follow just me, I'm eIrvin1 at on Twitter, and that's pretty much the best place to find me.
All right, everyone. Well, thank you so much. Thanks, everyone, for joining us. I really appreciate my expert panelists here. Really appreciate everyone who joined us on the webinar, and everyone, of course, who is going to be watching this later on a recording. Hope you enjoyed it. Hope you've thought more about how you might want to look at crypto investing inside a individual retirement account. Thank you, CoinDesk, for putting this on, and good luck investing, everyone.
Yeah, thanks, Adam.
Thank you.
Thanks for having us. And
Yeah,
one thing I was going to say, if anybody is looking to contact us, primetrust.com, and contact us, fill out that form, and we'll definitely answer any tech questions, sales questions. But really appreciate everyone's time today, and excited to see IRAs grow in the crypto space.
All right. Thank you very much, everyone. And again, we will look forward to seeing you all on the next webinar.
All right. Take care now.
Thank
Thanks,
you.
everyone.
Take care.